Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you both for being with us. So tough week. I mean, look, 4th down day for the Dow, selling again, worries about sticky inflation. Alan, I know you do a lot of looking at the technicals, but how do you feel when you see the volatility and maybe some selling that's been happening?
I'm purely a price guy. And to go back to your last guest, I think the Fed has gotten the results that it wanted. Yeah, we were getting a little flare in inflation, but 3.5%, we would have been really happy with that last year. And the market's within striking distance to all-time top. What I'm looking for here is yesterday's low in the S&P did not see new relative highs in the VIX. So that's bullish divergence. And if we can escape, then that's just another example of how this market tests the bottom and then bounces back each and every time. It's done so far. And, as Ben often talks about test and reject, let's see what the 10-year note yield does. It did go test that 350 yesterday. Let's see where we stand in the next couple of sessions.
All right, let's get to some of our names here in the big three today. We'll start with Unity. That's the first name that you have on your radar.
Yeah, Unity Software, it's back to the base, giving us another opportunity. If you remember last fall, it had a big run up, and it was up at the 45 level just in December. Now we're at 25. 25 is an amazing super support over the last 2 years. We've been mainly between 25 and 45. There was one test and a reject back in July where it went down to the 22 level, but it did return right back into that range and then rallied. So what I'm looking at here is I see bullish divergence from that November low. So I'm looking at a July option, a July 22 call. 22 again is that extreme low. It's trading for about 550 or so. The stock's at 26, so it's $4 in the money. And I like the fact that we've come back to this base, and from risk reward, it's a good level to lean on.
All right. What do you think about the chart here? Looking at the technicals.
Well, Nicole, I'll tell you, as much as it pains me to say this, I like the 3 examples we're going to break down here today. And I do look forward to pushing back on some of Alan's expectations here. And let's just start right out of the gate with that in that fashion here, because this isn't a bearish trend to the downside. Alan mentioned price activity has been relatively contained, but that does not make a buy signal in my book. Take a look first and foremost at some of the recent price activity. We're going back to the sell-off we saw off the highs from yesterday. We're up around 27. High conviction trade at the downside, sideways consolidation, no rejection of this weakness we've seen, but this is just a short-term time frame. Taking a look at the 5-minute candles again, 2 areas of consolidation my eye was drawn to. 27.20, high conviction where you get that separation, the market's seeking value lower and then it finds it, right? So if nothing else out of this whole discussion, this whole breakdown in these 3 stocks, do you get nothing else other than the ability to look at price activity through this lens and to identify these 2 phases of development? I think that's a win. Let's step back from this 5-minute candle chart, because basically what you start to do is take those smaller areas of consolidation, stack them up, and start to establish value. Which way is it moving? In this instance, again, to the downside. So from a 5-minute candle chart now to a 4-hour candle chart, looking at yesterday's price activity, now going all the way back to the beginning of the year. We were up around 42, bounced around 38, around 33, and then again, look at this, a breakdown more recently, and we've been consolidating around 26. 33 is a key area here, though. Let me show you why. Not only on this chart, because that's that first indication that we started to reverse this pattern where value is forming lower. That would come in the form of taking out 33, because while we're balancing around 26, we're expecting a new value to form at lower level in continuation of this pattern. And then again, that reversal would come by taking out something that was significant established on the way down. We've yet to do that, simply put. Another step back shows, again, as we look even further back, we're going all the way back to the December of 2021, we are in a well-defined trend lower now across multiple time frames. We looked at a 5-minute, a 4-hour, and now a daily candle chart. We're off that November 2022 high we saw up around 200, currently holding below 30, in balance and forming value again around this $33 level. Alan mentioned these key areas of support we've seen in the past. Those are great until you break down and take them out, and then eventually you see high conviction. This is all in continuation of trend we've seen to the downside. I have to give the benefit of the doubt to the bears here, Nicole.
Oh boy. Oh boy. And you know, folks already suffered when this went from $50 down to $22. You know, right? The shareholders suffered. So let's see what Alan has to say. Final thoughts here at 25 bucks and change.
It did test, and it did make that new low at 22, and it was quickly rejected and rallied all the way up to 45. So this 25 level is a level to lean on. I like the potential. It's a stock that's down 35% in 2024 alone. So I think it's a little bit overdone to the downside. And the technicals, you know, buying an in-the-money option with 3 months of time is a way to play, being long from that extreme low at 22.
All right, next up, U.S. Slca. Well, you know, this is not a name we cover. U.S. Slca, 1 year it's up about 7%. It's up off the low of around 10 bucks or so. Tell us a little bit about the story here, Alan.
Well, the story is I stumbled across the chart, really. We were talking about this in one of my office meetings about silica and silicone and silicone chips and all this. And I just came across this chart that I think looks great. I guess part of their business is in the energy business. And so, you know, that's obviously expanding. So that's the backstory. But what I like is the chart. It's been between 10 and 15 for a year. A breakout of that range targets 20. I'm seeing leverage buying, which is one of my indicators that I wanted to see, which is money flow into this stock, and that's what I follow. We had bullish divergence in the fact that it made new lows in February. It's had a big bounce in there, but made new lows, but not new highs in implied volatility. That was a sign of the sentiment shift. So we're trading about 13 and a quarter right now. I'm looking at the 10 call for September, which has almost 6 months of time. And the 10 calls trading for 375. So my expiration break even with 6 months of time is only 50 cents higher. So it's all about the math and it's all about the chart. And I guess once I dig more, the story makes sense as well.
I see. All right. And look, materials, energy, it's sort of, you're right.
Yep.
It has both in there. And your thoughts, U.S. Slca. Take a look at this one here, Ben.
Yeah, Alan's right. The chart does look good if you're dialed in on some of the most recent price activity over the last few weeks. But once you take a step back, this is going to be another good example of where it still looks to me like the bears are in control here. Let's just start with some of the recent price activity. It has been bid, right? We've seen a pretty well-defined run-up. We're talking from around the $10 level. Just a few weeks ago, all the way up to 14 recently. Part of the catalyst here being earnings. You can see sideways consolidation into that imbalance that's created by the news. You go back into a bit of a consolidation phase, breakout again, kind of wash, rinse, repeat, staircase type pattern, multiple different ways of describing it. Bottom left, top right, I've got a 60-minute candle chart where you can see every dollar, look at this, 1060, 1160, 1260 in a very systematic fashion we have in continued form balance at higher levels. So as long as we hold above 1260, we're in a bullish pattern, right? But take out 1260 ultimately in that discussion or that narrative really starts to falter. And I think that at some point it could possibly. Why? Because, well, take a look at this longer term chart here. You're going to see now we've gone from a 60-minute candle chart to daily candles. We're looking all the way back at the spring of 2022. High conviction to the downside, sideways consolidation, a stock that's been mostly range bound, hasn't really provided much in terms of conviction. Well-defined upper extreme, call it 16, 17. Well-defined lower extreme, again, around that $10 level, but currently balancing around 13. So there's random type price activity, opportunity even within this consolidation area that we're forming. But let's take another step back and go from an hourly to a daily, and now I've got a weekly candle chart. Here you can see again why I'm saying give the benefit of the doubt to the bears here, Nicole. Well-defined trend lower off that Feb 2017 high up around 60 bucks, currently stuck in a very mature balance area that's forming around 13. Basically since 2018, this stock has been stuck sideways, kind of like a pop bottle waiting to just explode. If it does take out these lows here, Nicole, I mean, again, you're getting down below $1. I mean, the risk reward becomes somewhat limited to that point, but it still looks to me like within this range, we could have some continued weakness here in line, again, with that longer term trend lower.
Yeah. All right, Ben, thank you for that. Any final thoughts there, Alan?
I just heard a lot of ifs. I heard a lot of ifs, and ifs. You know, I've got a 50-cent break even on this stock. It needs to move 50 cents. The whole idea of these three plays today is these all have really asymmetrical gains from modest moves in the underlying stock. A small move of $1 or $2 in any one of these stocks can produce big gains because we're buying these in-the-money options from these key levels. And again, this is a key level at $10 for the strike price.
All right, next up is Petrobras, Brazil. The CEO, in the last 24 hours, the CEO will stay in that role. That was under some scrutiny, and so that has been determined. The CEO stays in charge for now. A special dividend out as well. Right now it's sitting at $16. Has been on a bit of an uptrend, but had that big gap down after the earnings. Tell us a little bit what you think here, Alan.
Well, there's a lot to this. Actually, this stock is unchanged in 2024 versus the XLE, the energy ETF, up about 15%. Now, to get into how options work, and hopefully this is a bit educational, I try and make it a little bit informative and somewhat entertaining as well, but this is a stock that I put on a position last September. And it was an April option. Now the April options come and due, so it was a September 13 call, and right now we're sitting at 16. So that option's worth about 3 with expiration coming up. Now the expiration coming up, but I still love the chart. So what I want to do is roll or extend it, and that option costs $275. So that option's profitable right now. To get into a new position, I want to look at a January $12 call. This is a stock that's been between 12.5 and 17.5 for a year, so that targets a breakout to 22.5. If this starts to play ball with all the energy stocks like Oxy and et cetera, that all have had big rebounds. So this option right now, the $12 calls cost about 4 for January, which is 280 days. 4, and the expiration break even on this is about 10 to 15 cents away. So it's a bullish position with a very high delta, a little bit more of an exact stock substitution strategy than I usually go to, because the way the option's that far out, there's a 12 strike, and then the next strike is until 15. So I'm going to go with this deep in the money option with some confidence in energy stocks to continue to do very, very well. And this allows me to maintain my position because my in the money option is still in the money.
Okay, standing tough on this one. Ben, your thoughts?
This one I can buy into, Nicole. Pretty well-defined trend up here, so I like the favoring positions on the long side here. Let's just begin first and foremost with a 5-minute candle chart. You can see the granular, well-defined activity we've seen, which is supportive of Alan's narrative we're talking about from last week down around 15 into the end of the week, all the way up to 16.29. Pretty well-defined trend here, easily identifiable. It's a 5-minute candle chart, so let's not put too much weight into this one, but I did want to point out that, again, in this instance, we're talking bottom left to top right, so supportive of that on the short term. Now, when you step back, you're going to look at a 4-hour candle chart here, and it's really not providing a lot of information. We're kind of just in the middle of the range that we've been in, going all the way back to the end of last year, beginning of this year. We've got an upper extreme around 18. We've got a lower extreme that we saw into earnings, if you remember, back in March last month. And you can see how, again, just not a lot of conviction one way or the other here. So let's take a step back. We always say when in doubt, zoom out. And this chart provides a lot of clarity. Not only was it that 5-minute candle bull trend that we were talking about, the short-term rally we've seen since Friday, but also a well-defined trend higher from $4 back in April of 2020, just shy of 18 as of recent, currently in balance, and we're forming an area of consolidation around 16. We always look at this as acceptance. I also want to point out that we're holding above a couple key highs here from back in the spring and summer of 2022. So this is a key area that the bulls are going to want to hold. Possibly that we're going to form a larger area consolidation around this $14 level if we stall out here a bit and just kind of work our way back into the range. But yeah, this is across the board here, a bullish pattern here on that 5 and on this daily candle chart here, Nicole.
All right. Thank you both so much. Great to see you for the big 3 today: Unity, US Slca, and Petrobras. Alan Nuckman of bullseyeoption.com and Ben Lichtenstein there on the charts. Thank you both. Coming up next.